Good morning. Let's get rolling here. You guys have been slacking off. All right. All right. So, as you know, market started off on a positive note yesterday and slowly gave it up to where it gave it all back. And the S&Ps will look at that. They ended up pretty neutral here, but the Russell took it on the chin, and they were holding for a while last week, and then they started to break. So now we got this nasty looking big red bar, clearly a power bar on volume. Now, the problem here is the next level of support, and it's a rather significant one, isn't that far off. So it's not a wide range bar igniting the type that we would see, okay, let's jump on board this because there's this great opportunity on the short side where it'll go down. Now, that doesn't mean there isn't for intraday traders as long as the trend continues lower. And, you know, it is lower on the hourly time frame. We never got the flattening out kind of a move where we then look for the transition on the hourly, you know, to go from a red to a green and then back up again. So now the wide range bar, you know, momentum move in a smaller time frame, which has now created this price void overhead. And you know, we've talked about this, you know, in the room in the past, is that yes, wide range bars are power bars, especially when they come with volume. It could be a W, we'll see. And that a W pattern can happen, especially intraday, of course. It takes multiple days to happen on a daily chart. But we've got the void. So that opens up the door for a retracement, but the pattern doesn't suggest a retracement, of course, because it's trending down now. You know, you can see the 20 on the Russell here is pointing lower. It's under the 50. Now the 200 is still pointing up. So we use moving averages as visual aids. They kind of give us a real quick overview of what's happening. And as we look at this alignment of moving averages, we see that this particular, you know, pattern here is one in which had been in an uptrend. If we just took the prices off, we would know from the moving averages that they've been in an uptrend because you can see the slope of the moving averages and how they look now, especially the 200 was actually rising. A stock that's coming out of a bottom, the 200 MA will often be declining or beginning to flatten out. This one was actually rising. So now the wide range bar creating the void is power, but there's nothing there, meaning there's no foundation, there's no resistance overhead. And so with that kind of power, you don't need resistance overhead for prices to continue to move lower. But what typically happens, because we look at this just from this time frame, prices are extended to the downside. They can become more so, of course, but typically after prices run as far as they have here without stopping, traders typically are going to become a little hesitant about continuing to sell or sell short. Rather, they're going to look to say, hey, let's see if this will bounce. That's reasonable. So what happens in a bearish scenario, well, a few things can happen, but one of them is where it just consolidates. Whereas while it's trying to bounce, which we can observe from the intraday time frame, it cannot. So it tries to go up and it fails. It tries to go up and it fails. And that can cause a base in the intraday time frame that then sets up the potential for a breakdown to go lower. And as part of the master trader technical strategies, the thought process is lower to where? Is there a void below? I see that there's one up above here, but lower to where? And we would say, well, somewhere down here. So from a swing trading point of view, that really doesn't open up a great opportunity, to say, what's my reward to risk here if I'm going to say put my stop above the high of the wide range bar because there's nothing here. And so that, again, not a great opportunity for a swing trade. But right now we're just trying to observe the possibilities from the market and what it's doing. Now, if this was to stabilize here, it could retrace all the way back up. And that, as we're looking at this, really doesn't seem like a real good possibility because wide range bars like this are powerful. But that's exactly what could happen if those attempts to move higher consolidate for a while and actually do break out, because then there's nothing to trade against on the way up. And that's why wide range bars, I call them, are the weakest link. They should produce more downside. But if this consolidation doesn't result in a move up, a move down, it could result in a complete retracement. Well, yes, support down here and no resistance over here because of the way it came down. How much resistance is at the August low? Frankie's means support. How much support is at the August low over here? Well, there's no way to really know, Frank. When we recognize a reference point of support, that's all we really can do. So there are different things that we look at when we see prices coming down to support, meaning let's say that the wide range bar, and it kind of hit here and then, it failed, but this one gapped up and went down. But let's just say the wide range bar started here and it never stopped. Well, if it kept going down multiple bars in a row down to here, I would just look at that as, what is the possibility of prices holding that area, at least temporarily? I think they'd be pretty good because common sense, kind of like this, multiple bars in a row into an area of support, odds are it's going to try and hold there, and because it gets extended short term. But to look at this reference point and try and figure out how much support is there to say, what are my odds of buying down there? Will it really hold? Nobody knows, because let's just say for some reason some news comes out, and whatever it might be, and the selling is just relentless. It'll go through that like it's not there. Versus a kind of sell-off day where there's nothing really going on, but no one showed up to the party, the buy party, and prices sold off, for the next 2 hours, and prices get down there and you get an extreme NYSE downtick, and probably things bounce pretty good from a scenario like that. So when you look at support, don't look at it as trying to figure out, hey, this is pretty strong support and it's going to hold. None of us know. We just, hey, that's a reference point. Let's see what happens when it gets there. That makes sense. So this is what we'll be looking for today. Historically, like this wide range bar resulted in a little consolidation inside day. That could happen today where it goes nowhere. And then maybe it continues. It was a little unusual to get, it gapped down. So I shouldn't say that's unusual. If it had just opened there and went up, and that was a topping tail bar next to that inside bar, that would have been a great short. But this was a little wacko because other markets don't look like this. This one's been showing relative weakness where this gap down and buyers stepped up, and then they just sold the gap up here. So, but this is grinding down, and the assumption is that, look, where would we look for buyers to step up? These two reference points there, and prices are almost at that one. So if market is going to continue weaker, scrunch that up there, and it's got the 24-hour time frames. That's why it's got all those lines there. You got that line, you got that line, and ultimately, down here. So where would we want to buy, right? This is trending down. Let's say it accelerates lower. Where would we want to consider buying with the appropriate bullish pattern, which could be, what Chris was saying, a W on the horizon. I think we would all agree here, because as we look at, this low, and this low, this one jumps out as being the most significant because it retested what was resistance, and then it became support, and it was a big blast off from there. And, this was a sloppy higher low and whatever. So I think down here would be where the majority of us would consider a W type of a bottom, especially if it dropped and created this void, because then it could, you'd have a nice potential to move up significantly. So if I was to say what would be the ideal scenario for a bounce, it would be another day slamming down into this area, because then you would have this extension followed by another extension, and we'd have a big void up above to trade into. All right. Spiders, neutral day yesterday, gap up, tried to go higher, went lower, came back up again, little candle body, marching in place, went down, it's hooked back up again, and we'll see if it can hold this area. So, basically it's a wait and see whether it can get above yesterday's high or down below yesterday's low. Qs, grinding up, higher highs, higher lows, and we get a pullback later in the day. So we'll see if it holds here. The same scenario. This one has more support because of those 2 days, but can it trade below yesterday's low or up above yesterday's high? And we looked at the Russell. Transports are just chopping around here, and we've got maybe a head and shoulders top beginning to develop here. We got to wait and see. As you know, oil's been doing well. It's up a little bit today already, which you can see right here. And the wide range bar up, and right now it's consolidating. This is our greater than 100% retracement concept. We had this head and shoulders bottom, and it's rallied up. So after a greater than 100% retracement, historically, prices stall. Doesn't mean the trend's over. Good morning. But they typically stall. There's already kind of ran their race. They had their pullback and their push, and this was the accelerated move. And now we've got a green wide range bar, which created a void below.
Hey, Greg, an interesting note I saw in the journal this morning. It said October is historically the worst month for gold, silver, and oil. And I don't know what that does for us, because we just trade the charts and we're long oil in our ETF trader. So I just thought that was interesting.
Well, I don't know how they even make such a comment as far as grouping oil with gold when gold looks like that. So if it's going to get worse than this, God help the gold holders. This looks more like it's trying to make a short-term bottom here. But, those general kind of statements about seasonality and all that, you can, like we do, you look at it, take it with a grain of salt, as they say, and look at the charts, and maybe there's some benefit to it, but you can't look at the type of information and go to, hang your hat on it or risk, even a quarter or a dime on it. But hey, it's, the media writes up stuff like that and gets some attention. Bonds, holding here for now. They do have a look like they're going to go lower. As you can see, they got this topping and this break here. And, as I look at this big topping pattern, and even the way it consolidated, this is a monthly chart, and then started to break, unless it can get back up above this level here, this tells me it's going to keep going down, and there's a little shelf here. And just like the Russell, if we said, where would we want to buy bonds? Well, look at this big swing low here on a W type of retest. That's where I would think, bonds would bounce from, especially if it just collapsed in a climactic way to the downside. So that's what we'll be keeping an eye on day to day. We look at bonds to see how they're reacting. And so far, look, consolidation, and they're trending down. Expectation is that they're going to keep going down, and unless something reverses. It's a little extended on the daily. Buyers are stepping up here. Can they get it above that high? we'll see in a few days. Gold, we already looked at, and the NQs, there's the daily, and they're just greater than 100% retracement. They stalled, and they're bouncing up here a little bit pre-market. Ideally, from a bullish point of view, this just chops around sideways a little bit. And you see where the bodies are, the candle bodies in relation to the wide range bar. And then it resolves itself to the upside, you know? Maybe we got to hear more about the Supreme Court thing and whatever news they're going to come out with today. Not that that relates too much to the stock market, but hey, this market is focused on news, and that's the way it's been. But buyers keep stepping up every time it gets down to support. So I guess that's it, Dan. You can review the open positions and whatever gappers of interest here.
All right, thanks. And actually, just to add to your last point there on the Kavanaugh, I think it does severely affect the stock market because we have such a divided, political congressional base. We have a divided Supreme Court. If he doesn't get through, that's going to affect the midterms. That's going to affect all of Trump's policies. If Dems get in control, future decisions are going to affect all kinds of businesses. The Supreme Court, as you know, it's our legal final arbiter of highest court in the U.S. So they hear every single important matter. So that's going to affect business and the stock market. So we are in a very difficult newsy time right now, and the market's sideways patterns and choppiness, and our caution supported that. We keep saying we need an event, we need clarity. Yesterday with the bullish gap in the market, I totally came out with a bullish bias, but I said let's wait and see how we close, and look at the 15-minute chart of the spiders. Started off small, breakout failure, breakdown at noon, and a steady downtrend, almost filling the gap. So we're back on the sidelines. And that's our bias right now, as you just went through. Now, back to some opens here real quick. Well, let me show you my tier 1 long watch here today. And I sent it out in Telegram to our subscribers. Look at this Weight Watcher. Look at this daily pattern. It's getting tight, 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 tight. Here at the 200, the 20 is converging and flat. The weekly had a breakdown failure going sideways. Monthly buy setup, bottoming tail. Perfect gap to 74. I mean, I see no problem this thing darting to 80 and then 85. So this is my favorite setup right here. So all eyes are going to be, or at least both of my eyes are going to be on this at the opens. All right, Charlie Papa. We have a put spread. We covered half. Apple, we're not in yet. TTD, we have a put spread, and it's 100% retracement. It's on support, but it's not looking good. So we're just gonna have to manage it. Oh, MRO, no, we're not in that. Intel didn't trigger. Netflix, we did a put spread yesterday. That looks fine. TMOS covered call. It's doing its job of collecting the short premium. PTD put spread. Moss put spread. Hey, Moss looks good. It might set up to be a directional. We have a put spread now. Lilly did not trigger yesterday. It still looks great. XLK did trigger. And when it broke down here with the markets, we converted it to a covered call for Friday.